Hello and welcome to the FAL Crypto Minute, your number one source for educational crypto content. On today's show, we're going to be going over the top 10 cryptos for the day, as well as Tesla blames selling 75% of their Bitcoin on COVID, and former Coinbase product manager charged with insider trading. All that and more on today's episode of the FAL Crypto Minute. Before we get into the stories, as always, we're going to start off with the top 10 cryptos for the day. And at number one, we have Bitcoin at $23,124, down 0.44%. Number two, we have Ethereum at $1,584, up 0.32%. At number three, we have USDT. As number four, we have USDC. At number five, we have BNB at $264, down 0.12%. At number six, we have XRP at 36 cents, up 0.23%. At number seven, we have Binance USD. At number 8 is Cardano at 49 cents, down 0.17%. At number 9 is Solana at $43, down 0.14%. And at number 10, we have Dogecoin at 69 cents, down 0.07%. And that was your top 10 cryptos for the day. I recorded this at 5 o'clock in the afternoon. Moving into our news stories for the day. Tesla blames selling 75% of their Bitcoin on COVID. In an earnings call that occurred yesterday, Tesla revealed that it had sold 75% of its Bitcoin holdings, worth around $936 million, as was reported by its Q2 earnings. Tesla CEO Elon Musk explained his decision by saying, "The reason we sold a bunch of our Bitcoin holdings was that we were uncertain when the COVID lockdown in China would alleviate," Musk said on the call. "So it was important for us to maximize our cash position given the uncertainty of COVID lockdowns in China." China is said to have eased COVID restrictions in all major cities back in May, but a spike in cases in the area of Beijing and other key places prompted the government to bring back certain ordinances just a couple weeks later. Just earlier this month, widespread lockdowns and testing were administered in Shanghai. Due to these decisions, China's zero-COVID policy is once again being put through the ringer, leading to new reports of potential financial disaster for its economy. Reuters is reporting that the world's second-largest economy failed to meet its previous quarter numbers in both commercial output and consumer spending. During the earnings call, Tesla claimed to have exchanged its Bitcoin holdings for $106 million in profit. Although the company sold this time out, it claims that it does not rule out a future where they re-increase their holdings of the coins. This should not be taken as some verdict on Bitcoin, he said, as well as sliding in there that they have not sold any of his precious Dogecoin. During the Q&A, Musk stated that crypto was a sideshow to the sideshow, and that the company's main focus reigns elsewhere. "We're neither here nor there on cryptocurrency," he said. Mr. Musk has been a very rambunctious figure within the industry for the past 2 years, with his first proposal of Tesla to buy Bitcoin being the black powder to ignite its price back in April of 2020, as well as being the needle on Bitcoin's balloon price in May of 2021 when he announced the company has sold some of its shares, bought just a year prior, leading to its steep decline in the whole market. Elon's intentions have never been clear, with those who defend him saying that his well-meaning attitude coupled with his business prowess could only benefit the space. But as these past couple of years have shown, Elon is here for Elon, though this does not rule out a comeback for him within the industry. And moving into our next story, former Coinbase project manager charged with insider trading. A former Coinbase product manager and two others ran a year-long insider trading scheme that generated more than $1.1 million in profits, U.S. federal authorities today alleged. Ishan Wahi, an employee of the San Francisco-based cryptocurrency exchange, allegedly provided information regarding to upcoming token listings to his brother Nikhil Wahi and his friend Samir Ramani. Authorities claim Wahi's brother and Ramani then used this knowledge to buy tokens before Coinbase announced their listings and then to sell them quickly for profit. The Department of Justice announced today that all three individuals have been charged with wire fraud conspiracy and wire fraud in connection with a scheme to commit insider trading in cryptocurrency assets by using confidential Coinbase information. The SEC also announced today that it has filed civil charges against the trio over the alleged scheme. The FBI has arrested the Wahi brothers while Ramani remains at large, according to the Department of Justice press release. Today's charges are a further reminder that Web3 is not a law-free zone. Just last month, I announced the first ever insider trading case involving NFTs, and today I announced the first ever insider trading case involving cryptocurrency markets, U.S. Attorney Damian Williams said in a release, referring to the charges filed against former OpenSea project manager Nate Chastain in June. Coinbase coins and tokens tend to shoot up in value once the exchange, which is the biggest in the U.S., announces their ability. It is known as the Coinbase effect. The information that Wahi provided his brother and Ramani enabled them to buy cryptocurrencies before Coinbase announced their listings and then sell them, making huge returns, the SEC claims. As today's case demonstrates, whether in equities, options, cryptos, assets, or other securities, we will vindicate our mission by identifying and combating insider trading in securities wherever we see it, said Carolyn M. Welshins, acting chief of SEC's Crypto Asset and Cyber Unit. According to the SEC, the 3 defendants allegedly bought at least 25 cryptocurrencies, at least 9 of which were securities. The announcement did not specify which assets the trio allegedly bought. In April, Coinbase announced it would no longer publish a short list of assets it was considering listing after Ethereum trader bought 400,000 worth of tokens in advance of that list becoming public, and the assets jumped 42% in 24 hours. As the industry continues to grow, these types of stories are definitely expected. We all know that they're not all good figures, good people within this industry out there, and it only bodes well for us, for the Department of Justice and other governments around the world to enact their laws and to make sure that it's actually running the way it is, because without it, then crypto fails in every way that it is said to benefit us. And that's all we have for today. Thank you for being here. Thank you for tuning in. You can follow me on Twitter over at crypto_Lajara. That's crypto_Lajara. You can follow the official FAL Crypto Consultants Twitter over at CryptoFAL. FAL is a one-stop shop for all your cryptocurrency needs, from answering questions for new people to bigger institutional clients. We're there for you. Regardless if you're a small business or bank, we'll make sure to take a tailored approach to all your needs. Our team houses specialists in all areas of cryptocurrency, from mining, trading, creating NFTs, DAOs, staking, and lending questions, and general market research. Go to cryptofal.com to learn more.